Hey everyone, this is Megan.
And Darla. We are your hosts of the Enlighten Benefits podcast.
Our goal is to help you understand all things insurance. In each episode, we will tackle the confusing topics and terminology as it relates to insurance.
We want to create confidence over confusion and make insurance suck less.
We hope you enjoy our show. Hey Darla.
Hey Megan.
How are you?
I am good. It's so hot outside.
Sweating your butt off?
Yeah, I'd take a lot of sweat for that, but could happen.
I feel like I'm still in vacation mode. My brain's a little blah today.
Got you. Don't feel sorry for you at all though. But okay. Got you.
Yeah. Well, today on our podcast, we have a very special guest. We have Greg Hawley with us. Say hey, Greg.
Hi. Thank you for having me.
Absolutely. Greg, you want to give us a little intro, who you are, what you do?
Sure. Live here in Tulsa, Oklahoma. Own a company called Flex Plan Administrators. We partner with brokers such as yourself and a lot of companies around Tulsa and Oklahoma and United States doing FSAs, doing administration type work.
So what's the biggest product, I guess, that you guys assist brokers with?
Probably flexible spending accounts would be our primary service line, and then COBRA administration would follow that up. And then we're seeing a lot of health savings account administration work, of late.
Okay. Well, let's dig right in. As I told you, we are a very free flow podcast. Let's jump into HSA. If you could give us, what does HSA stand for, and maybe who would, want to participate in an HSA account?
Sure, absolutely. So really all these benefits we're talking about would serve kind of complementary to what you would, your group benefits, so your medical, your core, your dental, your vision, those types of things. And so health savings accounts in particular, they are linked to the medical plan. Right. And that's different than some of the other plan types. But all of them really serve a purpose. They all can be really good depending on their circumstance, depending on the employer group, depending on, the individual's, needs. They all can be really good. Health savings accounts, if you are signing up in a high deductible health plan, which most groups now are offering, what that really means is the premiums are going to be a little bit lower, but the deductible would be higher. If you're enrolling in that plan, you then have the opportunity to set money aside in a health savings account that you then can use for those qualified expenses, including, anything medical, anything dental, anything vision, all those expenses that you would have, like your copays, et cetera, that you would have, would all be eligible for that health savings account, and you're getting that tax deferred. So it's just like it sounds. It's a savings account that you're setting aside money for medical, dental, vision.
Perfect. And as you said, the medical insurance portion is kind of the core, and then this is a complementary piece of the equation. So it really doesn't matter if, as an employer, you all choose to partner with, let's just say, Blue Cross or Aetna or United Healthcare. It really doesn't matter. You can still have that health savings account to complement your high deductible plans, right?
Correct. Yeah. So it doesn't matter what all the carriers nowadays are going to have a qualified high deductible health plan.
Right.
So really having the health savings account accompanying that is if you think about it, like obviously we're in the insurance world, so you have the HSA there, so you can have funds available should something happen and you need access to those funds. You have those, but primarily when you look at an HSA eligible health plan, it's really perfect for those that are maybe healthier. They don't go to the doctor that often, but you still want to have something for a catastrophic type event. So you still have insurance available, and then should something happen year, 2 years, 3 years, whatever down the line, you've built up that money in your HSA, and then you have access to it.
Perfect. So for an example, for our listening audience, let's just say that we've got a $4,000 deductible and maybe an $8,500 maximum out of pocket expense. And that plan is health savings account qualified. It's an HSA qualified plan. So not only, in my world, Greg, a lot of times I see the employer will say, hey, if you want to participate in this lower premium, as you mentioned earlier, we will also contribute a small amount of money into your HSA account. And then on top of that, the employee as an individual, they can also deposit money into that HSA tax deferred or tax free, correct?
Correct. Exactly.
So in essence, I tell people exactly what you said. Hey, if I'm sitting down with an individual and they'll ask me, should I sign up for that PPO plan that has $1,000 deductible, or would the HSA be better for me? I normally say, and I want to hear, if I'm on the right track, I normally say to that client, if you have met your deductible in the last 3 years, you probably need to be on the PPO plan. But if you have not met your deductible in the last 2 to 3 years, I would suggest the HSA. What's your frame of mind?
100%.
Okay.
As you know, in the business, most people don't hit their deductible.
Right.
And so you're really throwing money in that regard away when you're paying a higher premium.
Right.
Whereas you could still have the insurance, pay a lower premium, but be saving that money. It's always going to stay with you. That's where the HSA comes in. And it perfectly complements. And the IRS sets the rules. It changes every year. Mm-hmm. So, for instance, right now for 2022, if you're enrolled in an individual plan or an individual tiered coverage, it's $3,650 is the most you can put in annually. If you have family coverage, employee spouse coverage, et cetera, that's $7,300. That would be the maximum amount.
And that maximum is between your employer contribution as well as yours.
Correct.
It is the total amount that you can contribute.
Absolutely. We're seeing a lot of companies contribute.
Yes. And then also that money, it can roll over year over year.
Correct.
So the HSA fund is one that doesn't go away. And I also like the fact if you were to leave ABC employer, that's still your money.
Yes.
So some companies I have found have a vesting period or something like that where, you have to be with them for X number of months, days, whatever. And then if you ever leave that company, you take their money as well as your money with you, right?
Correct. Yeah. So you own the account. So it is absolutely yours. So there is no risk of losing those funds if you were to terminate employment, change, whatever it may be, or change plans. You still have that HSA. It's going to be there for you to use. And if you're using it for qualified expenses, you get that tax benefit. Another nice thing with the HSA is at age 65, it opens up to where you can then have access to take funds out without penalty. You can use them on anything you want. Now, of course, if you're still using it on medical type expenses, you still get that tax benefit as well. But there's no penalty after age 65. You could literally go out and spend it on a car if you wanted to.
However, you cannot continue to contribute into your HSA fund past what age?
65, if you're enrolling in Medicare.
Yeah. So I see that a lot. And again, there's a whole list of medical qualifying expenses. I'm sure anyone can Google that, find it on the internet. They do change, I find, a little bit each year. Those health qualifying events or items do change a little bit. Mm-hmm. But one of the interesting things is last year when I was looking with a client, baby formula was listed on that HSA, and she was a new mom, and she said, "Oh my goodness, I'm losing out." Sure. And so that was, a way for her to utilize some monies on her HSA, basically, I guess, to buy her formula tax free.
Sure.
Right.
Absolutely. Another neat thing with an HSA that a lot of the companies, I know that ours does, and most of them will, they'll have some investment options with it. So once, for instance, you get your HSA balance, with us in particular, it's $1,000. You then have funds you can like mutual funds. It's working very similar to what like a 401k might do or an IRA might do, and let your money work for you for as long as you have it.
Perfect. So then what is the difference between an HSA and an FSA?
Yes.
We hear those acronyms get twisted and turned and changed, throughout. So what's the main difference there with an FSA?
Okay. So HSA, of course, health savings account. FSA, very similar, and they are very similar, but there are some key differences, but it's a flexible spending account. So whereas what we just spoke about, the HSA, it is linked to that medical plan, meaning the only way you can take advantage of an HSA is if you are enrolled in that medical plan.
Right.
The flexible spending account, the FSA, is not that way. It is not linked or tied to insurance. It's not insurance whatsoever. It is really just a tax benefit.
Okay.
So if an employer is generous enough to offer an FSA, should absolutely take advantage of it. We always tell everyone it's free to participate in, but it works very similar in that you set money aside that you contribute. Employer does have some options to contribute as well. There are limits on how much you can do every year, but then you can use those funds pre-tax for medical, dental, and vision expenses. And it's a wide array of things you can use it on, including over-the-counter medication is kind of new. What it can't be used for is to cover like premiums.
Okay. All right. Now, there are some differences whenever it comes to an FSA in your rollover options. Correct. So explain that to us and how that varies from an HSA rollover.
Absolutely. So really the only negative that we would even have it all with a flexible spending account is that potential of that use it or lose it rule. So meaning put the money in, you don't use it for whatever, and you can lose it. And that's true. That can happen. However, a few years back, the government allowed a rollover, in which case right now it's $570.
Okay.
So as long as you don't miss your what you're going to contribute, what you choose to elect by more than $570, you're not going to lose that. It's just going to carry forward to the next year. You'd have the full next plan year to use those funds. Okay. So always just stress with an FSA is just to think through what they want to elect into it. Mm-hmm. And just, usually pencil out what you spent the last year for yourself, your spouse, your children on those types of medical, vision, dental expenses. Mm-hmm. If that's a pretty normal number, you're pretty safe putting that in. Okay. And then realizing you've got a $570 cushion.
Okay. Now, are the limits the same? You had said earlier, if you were on an individual plan with an HSA, you can have X number of dollars, deposited into your account per year. Are the limits the same with an FSA?
There are limits. They're not the same.
Okay.
And because the FSA is not tied to any of the medical plans, or, it's really just going to be what the IRS determines every year is the maximum they'll allow. Currently for 2022, that's $2,850.
So the limit is actually more than an HSA option.
No, it would be less.
It's a little bit less.
Yeah,
okay.
Yeah. Okay. But so $2,850 is the most you can put in. But it doesn't matter for family, individual, or anything. You can use the FSA.
Okay.
Yeah, you can use your FSA for yourself, spouse, and children. Another neat thing with how this plan works is because it's a tax benefit, it makes no difference if the employee is even enrolled in the medical plan, nor does it matter if the employee, for instance, has coverage for their spouse or for their children. That doesn't matter. That you can use an FSA for yourself, spouse, and children.
Wow. Okay. That's great to know. And again, there's no precursor, meaning you would not have to have, as you said, the medical plan. You don't even have to be enrolled in a medical plan.
Correct.
Now, what if we have an employee that, they don't offer health benefits, but the employer offers an FSA plan? We may have, a lot of individuals that are on Sooner Care or Medicaid expansion, what we would refer to it these days. Would that still be possible that they could maybe do an FSA in lieu of a dental vision plan?
Mm-hmm. Absolutely. Okay. It just allows them to again, set that money back. And everyone's going to have these types of expenses.
Right.
It's really if the employer decides to offer it, which there's perks for the employer as well. So if you think about it, how the flexible spending account works, whatever their tax bracket is what they're saving as an employee. That's what they're going to save on those medical, dental, vision expenses. Mm-hmm. At the employer level, whatever any of their employees contribute to the FSA, they're saving FICA tax. So they're really saving 7.65% right off the top. Okay. So really it's a win-win on both sides.
Let's talk about hop back over with me real quickly to HSA, Health Savings Account. Mm-hmm. What are the tax implications, or why as an employer, a small group employer, why would I want to do an HSA? It sounds, like maybe a little extra work for me as an employer to have to set that up. Are there any tax benefits for me as an employer with an HSA? Well,
as far as the employer goes, we always want to talk about, you want to offer your employees the best benefits package you can have. So having an HSA as an option, maybe tied in with a higher deductible, option, it just kind of makes the benefits package better. Okay. From a tax standpoint, there's always going to be tax benefits, anything that the employer were to contribute. There's tax advantages there for the HSA. Okay. And the other nice thing is, with the health savings account, depending on the target market with the employers, if they're, for instance, a younger demographic, they're really going to need to give them some options that maybe don't have that low premium, and focus then on having their money work for them with the investments, with the savings aspect of it. And so it has a lot of benefits to offering it.
Awesome. And also for HR, we do have a group of HR, directors or employers that work or listen to our podcast. I would think that would be a great opportunity for you to visit with your broker. If you are considering, hey, we don't have an HSA. Why have we not been offered an HSA? Obviously, you can call Darla and I, but that's also a question I would ask your broker. Is this something that would work well for us within our organization, and the same with an FSA, right?
Absolutely. And neither of these products that we're talking about are difficult to implement.
Okay.
And there's companies, obviously we do the administration on our side, but there's companies such as us, out there all around the country that do these types of things. And, we issue debit cards. You've got, smartphone apps, online portals. People have access to their funds. There's a lot of bells and whistles associated with the administration side of it that really makes it easy to do.
So if I'm an employer, which I am, I have a small business, and I, am thinking about doing either an HSA or an FSA, do I need to have a certain number of employees to participate in either of these plans before I would want to call you?
No, and that's a good point, because a lot of times there's a misconception that maybe these types of benefit plans are only for the larger employer group. And that's not the case at all. Now, there are some discrimination rules associated with them, based on how much employees contribute compared to like their what we consider your higher income employees. But here in Oklahoma, if you're talking about 5, 10, 12 employees, it's not really going to matter. So really, there's not really too small of a company to offer one.
Awesome.
And we help with the rural side of it. So we can do the math and figure that kind of stuff out.
Great. So, and I use the word compliance a lot. So you will absolutely assist your clients with staying compliant,
absolutely, making
sure that the rules are being followed. And so if I wanted to start one of these plans, you mentioned a debit card. Is that something that I would, that's how I would utilize my funds, correct?
Correct.
Let's say I sign up for an HSA, my employer is sponsoring this. Now this money is being deposited. The employee's question might be, well, how do I get my money back out of there? So what happens with that situation?
Yeah. So you'd have a debit card, and this would be the same way with the flexible spending account or the health savings account. So say, for instance, you go to an urgent care and you've got a $50 copay.
Yes.
You could just use that debit card. We call it the flex card. You just use that card and it's still your money. It's just, being taken from your FSA account or your health savings account. And then your balance would reflect that the very next day. The codes we build in kind of what we term smart cards. So we actually build the category codes into the cards themselves. So it can kind of know what it can be used for or what it can't be used for. The nice thing with all these plans is the debit card is really just a convenience. You can always still have access to the funds. If you forget to use it, lose a card, for whatever reason, you want to reimburse yourself at a later date, you absolutely can do that just by submitting a receipt.
Okay. So if like you said, I'm a little flustered, my son busted his head open and I take him to the urgent care, I don't have my HSA card with me, that's okay. I can go ahead and pay that up front if that's being required of me. And then I would just submit a receipt on the app, right?
Absolutely.
Yeah. You were showing me that app the other day when we met with a potential client.
Sure.
And that seemed very, very user friendly because you can see what you spent your HSA money on. You can see what your balance is. And then I'm sure there's like a camera where you could upload that receipt and get it deposited into your account. Or
absolutely.
Yeah.
Another key kind of complement each other, a little bit of a difference between the health savings account and the flexible spending account is you actually can have both.
I was just going to ask that question. Yeah.
So you can have both. So if someone, for instance, is in a high deductible health plan and they want to have a health savings account, contribute to that, you could still have what's called a limited purpose flexible spending account, and you could use that for the dental and the vision expenses.
Okay.
So you would have your HSA set aside for whatever medical needs you might have, but then you would have the FSA there for maybe you buy glasses every year. Mm-hmm. Maybe you have children getting ready to go through orthodontship, something like that, or you're going to have some dental work coming up. That's where a perfect opportunity to really take advantage of the best tax benefit is to actually put money into both.
Okay. And then are there more strict limitations on what I could use my FSA for, or are the items the same?
They're pretty much the same.
Yeah. Okay.
Yeah, pretty much the same.
Greg, thanks so much. You've shed a lot of light on the difference between HSA and FSA. If I'm out there listening and wanted to get a hold of you, is that something I can call your office and find out more information about these two plans? And how can we get a hold of you?
Absolutely. So Flex Plan Administrators, like I said, we're here in Tulsa, Oklahoma. 918-524-6321 is my direct office line. You can also get information on our website, just flexplanadmin.com.
Awesome. Thanks so much.
Thank you.
Disclaimer. Subjects that we discuss on the podcast are meant to be used as topics of conversation. All figures given are sheer examples. All information is subject to change and probably has changed since the airing of this podcast. Rates and figures change depending upon the demographic in which you live. Anything discussed in this podcast is our opinion. We do not represent Medicare, any governmental agencies, or any of the carrier partners on the show. Each person should do their own research on the various websites to ensure accuracy.